this video, I'm going to demonstrate the importance of understanding what COGS is, or cost of goods sold, and how, if you don't understand what COGS is, how much of an effect it can actually have on your business reports. So to start with, I'm going to explain what COGS is. COGS relates to the costs of the items that you sell. So if you buy, for example, an air filter for £5 and you sell the air filter for £10, the cost of selling that air filter is £5. Now, to understand whether you're using COGS or not, you need to ask yourself how you enter invoices onto your management system or onto your accountancy system. So if you're using the likes of Sage or Xero for finance, and you take a purchase invoice and you enter the purchase invoice directly onto the accountancy system as a purchase, then the odds are that you are not using COGS. Because what you're actually telling the system that is that the day you buy the part, that is a direct cost to your business, when that is not the case if you've not actually sold the part. Now you picture, when you're buying a part, if you look at the actual financial position of your business, if you buy a part for £5, you're simply swapping cash for product. So the actual value of your business hasn't changed. The change only happens when you actually sell that product. So when you sell this product, you sell the product for £10, your stock balance reduces by £5, and the cost of that transaction is £5. And the difference between the sale and the cost is the profit, which is £5. So if you do want to understand if you're using COGS or not, just ask yourself how you do enter the invoices onto your system. Now, the reason why not many people use the COGS method is because there aren't many systems that can actually handle the COGS accounting method. So you need to look for a management system that has the facility when you purchase a part to consider that part as stock and only account for the cost upon selling the item. So I want to look at an example of just how badly this can affect your reports. So in this example transaction, on the 17th of March, you purchase an engine for £8,000, and on the 2nd of April, you sell the engine for £10,000. Now, referring back to the method that I've just mentioned that you are possibly using, you will enter the purchase invoice on the date that is on the invoice, which is correct, but you will enter it to purchasers. So therefore, the cost to the business on the day you enter the invoice is £8,000, and that was in March. So you can actually see that the cost of the business actually lost £8,000 in March. Now in this business, they've only ever made one transaction, and it was this transaction, so it's going to be as skewed as this. I appreciate this is an extreme example, but it really nicely demonstrates why COGS is so important. In April, you sell the engine for £10,000, but all the cost has already been associated with March. So in April, it looks like you've made loads of profit. Now, it doesn't take a genius to figure out how this can actually be really damaging and lead to bad decisions. Now, if you are using the COGS method, or your accountancy system or management system is capable of considering that purchase as stock until you sell the item, this is what your profit and loss would actually look like. So even though we purchased the item in March, it isn't actually considered a cost because we haven't sold it in March. Like I said, going back, we've just swapped cash for product. So in April, we sell the engine for £10,000. There is a cost associated with the engine of £8,000. Therefore, the profit is £2,000 in April, which is exactly correct. So you can just see how wildly different these results are using the same invoices, making the same transaction, but recording it using COGS and not using COGS. So I hope that clears that up. I hope you now have an understanding of how you're probably doing it and why it's so important that if you want to start reporting from gross profit against your cost of business, it is essential that the system that you're using is using COGS. So I hope that helps. Any questions, please let me know. Thank you.